The Arab Spring and the European sovereign debt crisis have prompted a change in the GCC's trade finance landscape. Speakers at Exporters Middle East Trade and Export Finance Conference in Dubai explained that the withdrawal of some European banks from the market has left a space for local players to increase their participation.
10 to 15% growth has obviously come from international banks moving away from the scene. In terms of local banks meeting the standards which international banks had from a trade finance perspective, it's almost similar. And obviously customers also understand that local banks can partner with international banks when it comes to trade flows.
However, the increased credit and political risk in the region means that smaller corporates sometimes struggle to get the financing they need. As a result, there has been a surge in demand for such products as trade credit insurance and warehouse receipts in an effort to diversify funding tools and sources for more secure transactions.
Onboarding a client is not easy these days, even if it's trade specific. The compliance related requirements needs to be fulfilled first before we really look at our trade financing and structuring facility perspective.
We have to work a lot more closer with our dealers to manage the finance of transactions than we had to do in the past, because they're not getting that local support on the smaller company level. 4 years ago we were 100% letters of credit bank guarantee. We've migrated over the 4 years to probably a 50-50 letters of credit and credit insurance.
They are now tapping into a wide array of debt instruments, Sukuk to begin with, securitization, and other conventional and unconventional funding methods.
Documentary trades are traditional trade products which all banks earlier had, but the challenge for the local banks is to come out when they open up own space, come out with more of risk mitigation products plus the financing products linked together.
But despite more challenging banking conditions, the GCC's economies are picking up. Oil trade is flourishing, particularly with Asia, and government's efforts to diversify exports are paying off.
There has been a lot of funds made available to the corporates as well as the banks to ensure that they perform very well through times of turmoil.
There's a lot of non-oil, non-gas opportunities here for electronics companies and just consumer products.
We're trying to help Dubai diversify from just the oil trade, let's say. We have a lot of efforts on the diamond side to stimulate that trade. We have efforts on the gold side. And we've also, for instance, set up the Dubai Tea Trading Center. In 2002, when DMCC was established, the diamond trade was $5 million a year. Last year, Dubai did over $30 billion worth of diamond trade. So that just shows you how much it has grown.